traders, Cousin Vinny coming to you on Saturday the 3rd of August with a look at the week ahead, my market read, and a watch list that I am anticipating trading this week. First of all, last week, this is a chart of the spiders. I was looking at the possibility of a head and shoulders top with a bearish failure swing and volume tapering off. We had stochastics about to turn and MACD about to give us a bearish cross. Well, if we look at the current chart, we can see the channel that we have been in since November of 2012, that we held the 10 EMA. GTO was talking about the flag here, and we could consolidate in time, which is exactly what we did, above this Kirby shelf, if you will. And Wednesday, Thursday, and Friday, we saw a move off of that 10 EMA. We have stochastics continue to point higher, and we had some decent volume tapering off towards Friday. But for the most part, the spider didn't give the RSI bearish failure swing like we anticipated. Overlaying RSI, we can see that we got back above 70 here. So that negates the bearish failure swing. We had a nice move sideways on the flag, and for now we are showing lots of strength. So you can only go by price action and not what you think. Now let's take a look at the sectors and break these down. What I've overlaid was a price relative to the SPX on all of these so that we can see where the banks are outperforming, for example, compared to the SPX as a whole. Okay, we had this flag down to the 20 period, and had we been looking for a 3-candle reversal where we had a low, a lower low, and then a reversal higher, we could have bought this rally on the BKX or one of the components. Same thing with XBI. We can see the relative strength. We got above the 20 period moving average, and this continues to move higher. Now we do have a doji, and we are somewhat overbought on XBI, but we can stay embedded. Now you can also see that the relative strength on the builders has been moving lower. We see real estate shares have really dropped off, and relative strength is moving lower. And so we can look at the sectors that are moving higher. If you are a bullish only trader, you can look at these sectors and disseminate that at least towards the middle of last week, you should have been in some of these sectors that had relative strength and were bouncing off moving averages. Okay. XLU is moving somewhat sideways. If we look at a 6-month chart, we can see a somewhat different picture. We can see that XLU is below its high that we saw in the middle of April. XLV is outperforming. These two are two of the 3 defensive sectors. You can see consumer staples is at a double top, but the remainder of the bullish sectors are doing quite well. XLK is one of the few that are lagging. Okay, but cyclicals are continuing to break higher off of their 20 period. They're a few days higher. We can see that relative to the SPX, how these sectors are doing. So when you are selecting sectors to trade from, you need to be cognizant of what is in favor and trading relative strength versus the S&P 500. Looking at the sectors a little bit more in depth, we can see that the real estate shares, the IYR, is about to drop into a reverse Kirby. So if you're looking for some shorts going into the week, this is a valid area to keep an eye on. Note RSI continues to move lower. We did have a bearish failure swing on the sector, and we can see quite a bit of volume selling on the week. Stochastics is embedded down in the oversold territory, but the MACD is confirming that we could stay down here for a while if the momentum continues to move down like we did see here in the month of May and June. Watch this reverse Kirby on the IYR. IYT, we can see that we broke above this trend line and we're headed towards the 70 level on same. Note the Kirby levels here are a little bit off because I forgot to adjust these lines, but suffice to say that we might flag up here and catch the 10 period as it continues to rise, and we are overbought. Not my sector of choice, but something to look at. SMH lagging somewhat. We are respecting this descending trend line. We did turn down on Friday. Those stochastics and MACD are a little ambivalent at present. XLB, we're breaking above this descending trend line, this previous high. It'd be nice to see a breakout on higher volume on the components of XLB, the materials sector. XLE is back at highs. Note where RSI is and these Kirby levels that we're moving above. We have this level here to support prices if we come back down into a box setup. And we see what stochastics and MACD are doing. I need to update these charts. XLF, we had a nice flag as GTO pointed out. A lot of people got sucked into this thinking this was going to drop lower into this box area, but it didn't. We bounced off the 10 period. We need to see a follow through. I'm trading Wells Fargo. Let's take a look at that real quick. And we had a nice flag here on the news on Wednesday, Thursday. We did get into a options trade, so we don't have any comment on this particular one, but we had nice volume. And stochastic supports a continued move higher, and MACD is now turning back up. Watch for a crossover signal on Wells Fargo. We break above these highs. That might be an area to add on this particular name. The industrials got back above 70. This is one of the better sectors if you're thinking about trading this area. We had this nice descending channel. We broke out. We're holding the 10 period. We had some really nice candles on Thursday and Friday. Lower volume on Friday, but we did have decent volume on Wednesday and Thursday. Stochastics is getting up there, but MACD is pointing higher as well. So XLK, we're at a triple top and above a curvy level there. RSI could continue to move higher, so this might be an area to watch for lagging stocks, money rotating into XLK, which had a little dip here in the middle of July. XLP, consumer staples, we're back up at highs. We could get above this Kirby level here at all-time highs and trade higher, so watch these components. XLU is the laggard. I would expect that this could continue higher, but for the most part this is telling you that the defensive names aren't in favor right now, that the risk is that we could continue to move higher by virtue of the fact that the defensive sectors aren't finding much interest. And XLV, of course, is doing quite well. XLV being the healthcare sector, and continues to follow the 10 period EMA up. We had a break of this trend line a few weeks ago, and we're back above 70 on the RSI. One of the sectors that is really hot, obviously over the last 2 months, has been XBI, the biotech sector. So we flagged out here at the 10 period EMA. We pointed out that we probably would blast higher because we're above this Kirby. But we did see the caveat that Williams %R was in the overbought territory and said that we could possibly stay up there. So you needed to watch some of the other indicators to determine whether or not this was a sector you wanted to continue trading. Looking at the big cap stocks in the biotech sector, I was reading an article on Seeking Alpha regarding Cantor Fitzgerald's senior biotechnology analyst that was focusing on oncology and companies that would benefit, noting that the large biotechs are up year over year about 59%, mid caps up 33%, and small caps up 25%, with most skewed towards the large cap. So if we look at Amgen, we can see that we have a cup, and we could put in a handle with stochastics pointing lower. Looking at BIIB, Biogen, looking good, coming off of the 30 period moving average with stochastics pointing higher. CLG, Celgene, continuing to move higher, looks a little exhausted up here. Galena Biopharma, we have a trend change here, so something we want to keep an eye on with stochastics pointing lower. We would look for this to cross over, and then a first pullback would be our entry into a box setup. Glaxo, we can see connecting these trend lines up here. We're in a triangle pattern, a left shoulder, head, and right shoulder inverted head and shoulders pattern. Looks like stochastics is pointing higher with increased volume. Gilead, looking good, holding the 10 period, flagging here. This looks pretty promising with stochastics down below 50. It could turn. Imugen, flagging out here. Stochastics is at 50. New Link Genetics, looking for something here. Nothing at present. We got a trend change here. Looks like we could be breaking out on short term with, you'll be able to pronounce that, ONTY. Onyx Pharmaceuticals, I'm not sure why we're up here, if this is a buyout candidate or a someone mentioned a buyout. Regeneron, flagging out here, cup and handle. I'll look for this to move back down into a box setup with stochastics moving lower. We have a Kirby shelf here as well. Merck, which is, we have up about 25% on this one. We got into this on Monday. And VSTM. So those are the bigger ones. Looking at the flag at the 30 period and this Kirby shelf right here with stochastics pointing higher. This could be a good candidate going into the week with Veristem. CLDX, Celldex Therapeutics, is another example, very similar to the XBI breakout. We have a flag here. We're moving back above the 10 period. What I'd be looking for here is a breakout of this level on expanded volume. You could look at a trade if we open, say around 21.25, something like that, 21.50, and this hasn't already broken out. You could possibly trade this on Monday or Tuesday, depending on what the circumstances are. So this is another example of a stock that is moving out of this base, or this moving out of this low of November. We continue to move higher. We moved sideways. We broke out. We came back down and tested the breakout level, and then we moved higher, and now we're flagging. So this is a very bullish pattern. Doesn't mean it's going to continue, but this is quite extended. So if you're going to take something that is in like a third or fourth stage base, you want to use a smaller position. So if you were thinking about trading 1,000 shares here, you'd maybe trade a quarter of that, 250 shares. And if it continued to break out, you might add to that position. Another stock in this index that has a fairly good or well-known name is Mankind, MNKD. We can see that we flagged out here for the most part at these highs, and now we're breaking above this level, pulling off of the 10 period EMA. My inclination would be try to enter on a pullback to the rising 10 EMA. We do have increasing volume, which is what you'd want to see on the previous chart of CLDX. You want to see increasing volume on a breakout. We are above the Kirby level, and this trades decent volume at 8,500,000 shares on Friday. So keep an eye on that. Notice RSI is creeping back above 70, so we could stay up here for a week or two, or we could fail. I mean, it depends. You have to watch how we break out here. Does it continue to break out on Monday, Tuesday? You need to gear your trades along with that, as well as or 4-stage base here. So you would do the similar. If you want to trade 1,000 shares, you'd maybe do a quarter position at 250 shares and add if this continues to break out using the 10 period or maybe even shorter, a 5 period EMA for your trailing stop. CYTK, Cytokinetics, is another biotech that we can see. We have this big Kirby bar up here where we had quite a bit of selling. We moved right down to the 50 period moving average. We saw some buyers or short covering towards the end of the day on Friday. We saw decent volume to the sell side, and we are now in the overbought territory getting ready to turn. RSI could continue to move lower, so you'd want to watch that. I mean, this is a possibility. We could get a reverse Kirby here if we fall down below the 50 period. We see quite a bit of we could see an area where we could drop substantially down perhaps to the 200 period moving average, which is down here as well, around $7 per share. So that would be something on weakness you could trade on Cytokinetics if the XBI shows weakness this week, okay? But if it shows strength, there's a possibility we could bounce off the 50 period here, which would give you a good risk reward on a trade to the upside. All right, but do note that we have the 10 period, 30 period cross, so that would keep me out of this trade unless we saw a green bar on Monday with higher volume than we saw on Thursday and Friday. NPSP is another stock in the pharmaceuticals and biotech sector that I'm looking at. We have a nice buying pattern here. We have a flag. Just remember to check all of these for earnings dates. Make sure that you're not buying earnings that's going to occur on Monday or Tuesday after hours. But we have a nice move here. It would have been nice to see it on higher volume. Note RSI is turning back up. We're above the Kirby levels up here, so we're at all-time highs. We have a very nice bullish box trade setup pattern where we have an inclining 30 period, 10 period EMA. And we had a signal here on Wednesday. If you had caught it, I did not. So this is something to consider. If we see a breakout above 1888, say 1890 on increased volume, this might be a nice breakout on NPSP. Radian Group, for example, RDN, we can see that we moved above this Kirby level here after this flat cup or saucer base, and we continue to ride the 10 period EMA up to new highs. Do we continue? It's hard to determine, but you could enter a long and use the 10 period EMA as your stop as this continues to move higher. If it dips down below and creates a box setup, you could trade off of that as well. I don't tend to take box setups that are created with a sideways pattern. I prefer to see a box setup when you have a rising 10 and 30 period moving average, just like you see here back from November. All right, so a sideways base, you could trade a cup and handle or a saucer and handle base continuation breakout pattern, or a base and break. If you take these highs and lows and draw a box around this, that would be your base up here. So you trade the momentum direction of the breakout. You want to look for increased volume as well, which we don't currently have on Radian. So looking at the OEX S&P 100 index, we can see that we are holding the 10 period EMA, and we have a nice little push here with slow stochastics pointing higher, and we have some decent volume. So this looking pretty good. The mid cap 400, we can see a similar thing. We do have a Harami or inside day on Friday, so keep that in mind. Stochastics looks like it could push higher, but we had 3 really good days of volume on Tuesday, Wednesday, Thursday, with a little bit of selling on Friday. Okay, we are up above the Kirby levels, so that's looking pretty good. Let's take a look at the Russell. So Russell had an inside day as well. We are trading at highs, and stochastics looks like it could push higher. But most importantly, we can see that we flagged out here, and we are in a bullish pattern. We continue to move higher. So anticipating a move lower was a possibility. We thought we might get a box trade setup, but we held the 10 period, which is just as valid, and now we're moving higher. So if I were trading the Russell, I'd be looking for a move back down to the 10 period and a holding before I got into this. But we're getting towards overbought territory, so I'd look for a consolidation at some point. Credit goes to Arthur Hill over at StockCharts.com for this particular chart, noting that the advanced decline line for the S&P 1500 stocks, the overall trend, as we know, is continuing to move higher. This is a 21 period EMA, and you can see that we're making new highs here. So the advanced decline is confirming these new highs on the spiders, the Russell, and so forth. So you need to keep an eye on this. Another thing he pointed out in his chart was this 20 period moving average down here where we had support in these areas. When we lost that support is when we saw moves, consolidation moves down in this longer term uptrend. Note that if we continue to move higher, that's a good sign for the bulls, and if we break this trend line to the downside, that would be a sign that we could expect this move, the advanced decline line, to turn down and move down towards this ascending trend line. For the time being, the trend is up and confirmation is positive for the advanced decline. Looking at the volume line, similar advanced decline volume line, same credit goes out to Arthur Hill. You can see what we have here. Okay, this is a percentage of volume advancers to decliners. Okay, you note that 25% of the stocks are moving higher or reaching new highs, so that's something to keep an eye on if you're bullish in this particular market. TLT, I got stopped out on Wednesday and I tried to get cute again and got into some calls on Thursday, got stopped out of that again. I think my loss for the week was $1,500. So that's my loser for the week. Wells Fargo and LUV made up for the losses on the TLT trade. So if you check those on my watch list, you probably did okay as well. So that's what happened on TLT. And CSIQ also did quite well. So I had a number of winners and one loser. So not too bad for the week. This is Cousin Vinny coming to you from closingprint.com and daytraderbootcamp.com. Okay, this is my Twitter and StockBlitz handles. All you have to do is click on these and it'll take you right to my stream so that you can follow what I'm talking about over the weekend as well. Okay, take care. I hope this helps and we'll talk to you in the room on Monday. If not, I'll see you on Twitter.